Good morning. It's Tuesday, February 18th, about 6 a.m. Central Time. I'm Philip Streible, Chief Market Strategist at Blue Line Futures. Let's get you ready for this holiday shortened trading week here. Take a look at the precious metals, the futures, the commodities markets. So, looking at the precious metals overnight, you do have gold and silver prices. They are higher while copper futures continue its two-day sell-off here. They blend that Monday holiday session into the Tuesday session. So, a lot of the lows, the highs, things like that are all going to remain the same. So, let's start and take a look at the precious metals overnight, some of the key ranges and things like that. So April gold high is going to be 29.2880, up $24.50. Realistically, it's just tacking on about $10 from yesterday's trading volume. Now, most of the markets were closed here yesterday. All your softs, your grains, your meats, many of them even closed early. So not a lot of volatility here. I had a couple people come in speculate in the markets here, but it was one of the more relaxed trading sessions here. Now, a couple levels we're going to want to keep an eye on here. 29.6850, that's your record high on the gold futures contract. And then those lows, excuse me, 28.8760. So that was the low from Sunday night, which blends into Monday, which now blends into Tuesday. So we really need to see that level hold. And then February 12th, your CPI washout low, 28.6880. I did see some traders, though, working some orders there for that 28.88. They did pick up those contracts, so congratulations to you. Just off the low of the trading sessions. Other people are working a little bit lower than those levels here, and they're most likely going to have to ratchet that up as we're going to want to start to look at some of those key levels of support and resistance as the volume comes into the market here. So looking at March silver here, we're only going to be in March here for just a bit longer. We'll end up flipping over to the May contract here pretty soon. High in the overnight session is going to be 33.06.5. Nice to see it take out the 33 level, but realistically, it's the previous few days highs where you get to 33.18 to 21. I think that's your pocket resistance point. We break through that again, we could retrace back up that wick on up to the $34. The low is going to be 32.46 and the CPI low 31.87.5, most likely closer to my line in the sand. The gold silver ratio back last Thursday, 90-1. We go to Friday with that big spike up in the silver market, drops to 86-1. Monday and Tuesday, we've been hanging around about this 88 to 88.5 range for the gold silver ratio. Copper futures down 7 cents at 4.59. That's a 1.5% sell-off. So that's your biggest sell-off in the metals complex. If you're wondering about copper and you're wondering about the sell-off that's going on there, I covered that yesterday's video. If you're interested in that breakout strategy that I just discussed on the silver market, well, I covered that in length on Saturday's marathon long video. So looking at the gold market here and then focusing on the gold market, we do got that market edging higher just under about 1%. Now, Goldman Sachs, they did raise their target to $3,100 an ounce on central bank demand. They're saying that those drivers because of central banks and also the exchange traded funds that are bullion backed are really fueling that demand. So we saw a central bank demand average about 50 tons a month, and they do say that on any kind of spike up, on any worries or kind of tailwinds that come into the market, we could see something closer to $3,300 an ounce, especially if some uncertainty surrounding the economic policy really takes shape here. So they revised their forecast, and it came as you saw central banks added about 108 tons of gold and silver, and that gradual boost we're seeing in the ETF holdings. So you really need to see the retail investors start getting involved with the market, and that's where prices could really take off from here. Now, staying in the gold market, we are seeing a spike of exports from Singapore now into the US market here, and its record here hit 11 tons in January. So that was the highest level in almost 3 years, up about 27% from December. So the global gold market has just really been shifting around and looking for price disparities. That's why you saw between copper with the LME and the COMEX, you're seeing that also with silver go on, and you're seeing that's where we get these volatile sessions where they bid it up here and then they smash it down because of the fact that's when they're going to come in and they're going to close out the arbitrage window between the two different banks here, or the two different holding facilities. So we're really seeing those premiums come into the COMEX markets here where they're driving everything higher. Now, crude oil futures up about 1% here with the focus on OPEC plus, the output plans, and Ukraine talks. So they're saying that OPEC could be delaying its output increases. We also saw their crude oil exports through Russia were slowed by a Ukrainian drone attack. So OPEC is really thinking about pushing back its series of monthly supply increases, and that starts in April. So traders are also monitoring the talks between US and Russia, where it looks like they're leaving out Europe in Ukraine here at the moment to discuss their plans here to ending that particular conflict. So crude oil, it has had a bit of a rocky start. We got off to a good start to the upside here with maximum pressure in Iran. Then it started to come out. Then there was discussion that that the war would end. That's when crude oil prices really sold off. I think a lot of that's been factored in here. Now we're starting to see net bullish positions reduce, but futures prices are coming up here just a bit. So what I'm going to be watching here today, we do have the Empire State Manufacturing Index. We do have two Fed speakers. President Trump, he's going to speak, but that's much later in the evening. That would impact most likely the overnight market. That's why I say you really want to have a futures trading account. He announces some new tariffs, things like that. You can make some adjustments. You can pick up some gold, some silver on some of the volatility, other key commodities here, and sticking with gold and silver. We're going to want to keep an eye on some of those key levels that I outlined, especially those CPI lows. I'd circle those on the chart, or I'd put a line going across a horizontal line there. I'd look at that 33.18 to 21 on the silver market. We get above that level, could see a continuation of the breakout, retrace some of that big sell-off we saw on Friday. On the gold market here, we got to retrace that $51 move, really get over that 29.50 to 56, and then we can start looking to attack the all-time highs in the market. So you got any questions, futures option trading, give us a call. Be sure to go to bluelinefutures.com. You can register for a 2-week trial. We write research on almost everything, your energy markets, your S&P 500, your grain markets, livestock, and everything. We're a full-service commodity futures brokerage firm. Many people prefer us over any kind of these online firms because of the fact they have no customer support. They got no one to talk to. Platform goes down, they have any issues, they want a second opinion on things, that's where they reach out to us here, and we just give it to them straight how it is, how we look at these markets. So again, remember, futures option trading, it does involve risk of loss, and it may not be suitable to all investors. Good luck and good trading.